Welcome, dear traders. You are watching a recap of the Asian session. Yesterday, news from China and the United States had a huge impact on the movements of Asian stocks. Japanese, New Zealand, Australian and Chinese equities climbed on early Wednesday. What sentiment prevailed on forex? Watch our video review and find out. Yesterday, traders awaited US inflation data with a bated breath. Fresh figures indicated a slowdown in consumer prices. Hence, a recession scenario is getting less likely. This was also confirmed by the non-farm payrolls report, which again surprised investors. The reading hit a 4-month high. In May, the economy unexpectedly added 339,000 new jobs. However, it does not increase the likelihood of a dovish move by the Fed at its meeting today. Inflation is still far from the 2% target. Besides, many central banks stick to a hawkish stance. The Reserve Bank of Australia and the Bank of Canada have already raised their key rates this month, and the ECB is likely to do the same tomorrow. Nevertheless, 95% of investors believe that the Fed will keep the interest rate unchanged in June. According to the CME FEDWATCH tool, the regulator is likely to skip a rate hike. If so, the key rate will rise above inflation for the first time since mid-2020. Traders are confident about a pause in June, but they are less sure about the July meeting. About 63% of speculators have factored in a rate increase by 25 basis points in July. Therefore, they remain cautious. It's hardly surprising that the main highlight of the day will be the Fed's rate decision and Jerome Powell's speech. Some Fed policymakers used such words as skip and take a pause in their speeches. At a first glance, these terms have no big difference. However, when it comes to skipping a rate increase, it's a one-time move. Taking a pause means something indefinite and prolonged. Even if the Fed takes a pause in aggressive tightening, it will hardly come as a surprise for dollar bulls. Investors priced in such a scenario a long time ago, and the US dollar may slide to 102 versus its rivals. Yesterday, the greenback declined 203 points following inflation data. Shortly after, it was able to recover amid rising Treasury notes and risk aversion. In the Asian session, the US dollar was hovering in the range of 103.20 and 103.40. If the Fed's dot shows one or even two more rate hikes this year, it will help the US dollar resume growth. Conversely, if no rate increases are expected, the US currency and government bond yields are likely to decrease. Despite soft inflation data, the dollar-yen pair advanced to 140.30 and the highest level since June 5th. The Bank of Japan will hold its meeting on Friday. However, traders do not expect any changes. The regulator remains committed to an ultra-loose monetary policy. Given the Fed's aggressive tightening, the yen is unable to rise. As the rate gap between the Fed and the Bank of Japan is widening, the yen is extremely popular in the carry trade. In a typical carry trade, investors borrow the low-yielding yen to invest in a higher-yielding assets elsewhere. It makes the yen extremely weak versus its rivals. Therefore, it did not go far from yesterday's closing level, moving in a narrow range of 139.80 and 140.30. Since at the start of the year, the dollar-yen pair has fallen by more than 6%. The Australian dollar retained its upward movement in the morning. Yesterday, it appreciated following the news from China. On a Tuesday, the People's Bank of China cut its rate for the first time in 10 months. The regulator took this step to somewhat stir up the sluggish economic growth. China is Australia's main trading partner, and the Aussie grew on the prospects for higher demand for Australian goods. Today, risk appetite in the stock market improved, pushing the Aussie to 0.6788 at the end of the Asian session. However, it failed to break above 0.6800. A rapid rise to this high makes consolidation there even less likely. The Aussie is likely to keep trading in the range of 0.6763 and 0.6791 ahead of the Fed meeting. As the tensions are mounting, there could be certain volatility, especially for risk-sensitive commodity currencies. The Kiwi also made an attempt to settle on yesterday's high of 0.6195, but failed. It was unable to climb above 0.6170 at the end of the Asian session. Nevertheless, the Kiwi has been rising for the second session in a row. It was moving in the bullish channel of 0.6142 and 0.6172. The downside factor for the Kiwi was inflation data. Food prices have finally moved from a multi-year highs, and they fell to 12.1% in May, and now the Kiwi is trading at a 3-week high. Traders are extremely cautious ahead of the Fed meeting and the producer price index. Apart from that, they are anticipating Jerome Powell's speech at the press conference. And that's all for now. Don't miss our next video review, and see you soon.